Ladies and gentlemen, good day and welcome to Q3 FY23 earnings conference call of TD Power Systems Limited. This conference call may contain forward-looking statements about the company which are based on the beliefs, opinions and expectations of the company as on date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star and 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Nikhil Kumar, Managing Director of TD Power Systems Limited. Thank you, and over to you, Mr. Kumar.
Good morning, everybody. Thank you very much once again for joining us on today's earnings call. I trust all of you would have received our results and investor presentation. Now I shall proceed to discuss with you TDPS's financial performance for the month ended 31st December 2022. First, let's talk about standalone. Our total income on a standalone basis for 9 months was rupees 6.16 billion versus 5.13 billion. Over the same period of the previous year, an increase of 20%. Profit after tax and comprehensive income for 9 months was 593 million versus a profit of 314 million for the same period previous year, an increase of 89%. Manufacturing revenues for 9 months was 5.9 billion versus 4.93 billion, an increase of 20%. EBITDA margin for the 9-month period is 16.05%, including other income, which includes foreign exchange gains, and the same will improve due to increased operational leverage in Q4. Manufacturing order book, including Turkey operations, is 13.73 billion, which is rupees 5.05 billion manufacturing business, 8.47 billion railways business, and rupees 0.21 billion Turkey business. Export and deemed exports, excluding traction, is about 61%. Order inflow, the company recorded its highest ever order inflow during the quarter since inception. Order inflow is for the 9-month period is 42% over the previous year period. Total order inflow is at 613 crore versus previous year 433 crore. Order inflow from domestic market is 2.66 billion compared to 1.7 billion, an increase of 56%, and order inflow from export is 3.4 billion versus 2.42 billion, an increase of 40%. Projects business revenue for the 9-month period remains flat at 0.14 billion versus 0.13 billion, same period previous year. The company is no longer in the projects business, hence going forward all orders booked by a branch office of Japan will be classified under the manufacturing segment, which comprises of generator sales, spare parts, and other related jobs. Now I'll move to the consolidated income. Our total income on a consolidated basis was 6.36 billion versus 5.86 billion same period previous year. Profit after tax and other comprehensive income for the 9-month period was 599 million versus a profit of 378 million. Last year it also included 76 million of exceptional income of a write-back of creditors from our subsidiary company DF Power Systems, an increase of 58%. Our consolidated order book, as discussed earlier, is 13.79 billion. We continue to maintain a strong cash position of 2.04 billion. Now I'll talk about the market situation and guidance for this year. Overall, the demand for our products in India and across the world is extremely strong. The market penetration that we have been able to achieve over the past years has been instrumental in ensuring that we have an increasing order inflow. In addition, macro conditions are favorable with power shortages in India and Europe and increased trust on renewables. This financial year, we are on track to have around 8.05 to 8.2 billion manufacturing sales from TDPS India and around 0.2 million from TDPS Turkey. We expect cross contribution to be in the region of 30 to 31% for this year, which will result in EBITDA, including other operational income, on a standalone basis to be between 16 and 16.25% for Q4 and 16+% for the full year. Foreign exchange gains have been included in this EBITDA calculation. In Q4, we continue to see a robust order book which will ensure good growth for the next financial year. In general, my commentary from this point will be more forward-looking in the next financial year, since we have already given the guidance and visibility for this financial year. Let me talk really about each segment. Steam turbine. Strong demand continues from India and rest of the world. The order book for next year is very strong, with all our major customers forecasting strong turbine sales. This applies to both India and abroad. Segments are garbage burning plants, process industries, waste to heat recovery, and to a smaller extent, traditional coal-fired captive power plants. We have secured 2 more orders in the 2-pole segment for a total of 5 machines for next year. We will have the highest sales in the steam turbine segment this year, and looking at the current order book inflow and the projections made by our various steam customers internationally and in India, we are confident that we will surpass this year's number next year, which will then result in the highest ever sales for our steam turbine, crossing this year's record. The same goes with hydro. We are projecting our highest order book and sales in hydro for next year. Our markets are 100% export, and we are seeing strong demand coming in from Southeast Asia, Nepal, as well as Europe. Once again, hydro, we are selling our machine all over the world and getting orders from all OEMs within India as well as outside India. Gas engines, we have a strong order book and forecast from both our engine customers. Our sales with the second engine customer is increasing rapidly, and the progress is extremely encouraging. Recently, we got a number of orders from this engine customer for the US market, which is great progress, since now they are using our machine in all their bids in their home market. Gas turbines, we are actively involved in a number of orders in the fracking industry in the US. We have recently closed an order. We have not received the official document for it, but we have recently closed an order, and we expect to have at least 100 megawatts of total orders in this segment for the next financial year. Aftermarket, we have put a lot of efforts to develop a market to repair not only our own machines, but also machines of our competitors. We are expecting the aftermarket business to be in the region of 7 to 8% of our next year's sales. This includes our own machines, wind generators, competitors' machines, spares, service, and as well as synchronous motor repairs. Other segments. Railways, Indian Railways business on track. The motors have now clocked about 4 weeks on a locomotive, which is now in running condition with the Indian Railways, and we hope that it will all go well up to 6 months, after which we will get the qualification. Indian Railways new projects. All eyes are now on the 12,000 horsepower bid and the results of this bid, and we hope that our customer will win this order. We should know about this by end of March, hopefully this year. Synchronous motors, we still hold on our guidance for 50 crores for next year. The pipeline of inquiries for these motors and other inquiries for large motors is very large. It's around 500 crores. So prospects to pick up a section of these orders is very bright for execution for next year. With these developments, we're very excited about next year and the growth that we will achieve. Tentatively, we are projecting at least 20% growth next year with the upside potential, and we are going all out to cross the 4-digit, the 1,000 crore mark in the manufacturing business. We continue to invest in automation and productivity to improve operational leverage, to grow EBITDA, margins, and PAT. At around 1,000 crores turnover, we will see an improvement of EBITDA compared to this year, since our costs will not increase in proportion to our sales. All our subsidiaries will be profitable this year, except TDPS Turkey, which has shown exchange loss but not an operational loss. As informed during our previous earnings call, due to sufficient business and deteriorating economic conditions in Turkey, we will suspend our manufacturing operations in Turkey by 31st May 2023. This brings me to the end of my initial remarks. I'll now be happy to address any queries that you may have. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on their touchtone telephone. If you wish to move yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. Participants, you may press star and one to ask a question. The first question is from the line of Mohit Khanna from Banyan Capital Advisors. Please go ahead.
Hello, sir, and congratulations for a very strong set of earnings and good execution during the quarter. I had a query regarding the sustainability of EBITDA margins. Is there any one-off that you have, first of all, in these margins here? And then, how do you see margins progressing? I think you mentioned, but I somehow missed.
Yeah, I think the margins are very sustainable, and the margins are dependent on our sales and order inflow and sales, and our operational efficiency. So we are seeing, as I said, we have had a record order inflow for this 9 months for this year, and Q4 also we're seeing an extremely strong order inflow. So all these things are going to count towards our sales of next year. We have projected that we are going to be crossing close to 1,000, or definitely crossing 1,000 crores of sales next year. Our gross contribution is going to be in the region of whatever we projected. So EBITDA margins are sustainable, very much sustainable.
So because I'm asking this because if you look at the September quarter, from there our revenues have come down slightly by around 3%, but gross margins have improved from almost 30% to 33.7% in this quarter. So what exactly is the reason for that? Is it a mix that has changed for us, or FX have been accounted for? If you could just pinpoint the reason here.
No, quarter on quarter we have different mixes. So we would have had a number of service jobs and aftermarket jobs in Q3. But what we're projecting for the whole year is sustainable.
Okay. Yeah. Thank you so much. I'll come back in the queue.
Thank you. A request to all the participants, please restrict to 2 questions per participant. If time permits, please come back in the question queue for a follow-up question. The next question is from the line of Ranjit Savaram from Mahindra Mutual Fund. Please go ahead.
Yeah. Hi, sir. Good morning and congrats on good set of numbers. Sir, if I look at in your breakup in your presentation which you have given, the export is showing kind of a decline compared to last year in terms of the revenues. So is there any particular one-time issues over there that has led to this decline, or you see there is some structural trend? Because our order intake as per your commentary in exports is good. So why this reduction in revenue? Hello?
Nikhil sir, can you hear us?
Hello, can you hear us?
Sir, one moment, I'm checking.
Yes.
Nikhil sir, we are unable to hear you.
The person you are speaking with has put your
Participants, please stay connected. Ladies and gentlemen, please stay connected while we join the management to the call. Ladies and gentlemen, thank you for your patience. We have the line for the management reconnected. Nikhil sir, you may go ahead.
Yeah, please repeat that question. The second one, I missed it out.
In your presentation, you had mentioned the numbers that there is a decline in that. So just wanted to understand that is there any particular one-time issue or some hiccups in that, and will that revert back in the next quarter onwards on the export uh, execution? Hello?
So the total exports is around going to be around 36. Exports deal is going to be 61% of our order inflow, and our total export sales will be export deal is 60% of our overall sales. So quarter to quarter there could be some variations, but we will, it will catch up in Q4.
Okay, and we are pretty much confident in achieving this year's guidance in the manufacturing, right? Or is there any change in that guidance?
No, I have already said in my earnings call speech that we're going to achieve these numbers, and we're going to achieve these numbers.
Okay, great, sir. And in terms of the order intake flow funnel, if you look at it, like what is your general sense? Because there was some pent-up demand in Europe and US, which we were expecting this year. So, do you expect the same traction to continue in FY24 onwards, as per whatever the discussions that you have with the customers or the funnel that you're looking at? Just to get some clarity on FY24 order intake, if you can.
Yeah, so we are, as I said, the macro conditions are very favorable to the company. One is in Europe, and there's an increased trust in renewables. So we are going to see sustained demand coming from this sector, because it's not possible for them to replace the entire gas power network in just 1 year or 2 years by other forms of energy production. So a certain portion of this will go for renewables, and it will go on. It will go on for years, so probably a decade. So we are very confident the macro conditions as far as Europe is concerned will give us sustained demand. One is that. Second is that we have a low market share in Europe, and we have the potential still to grow our business by increasing market share by taking the health there. When it comes to the domestic market, we're seeing the order inflow. For example, for the domestic market, 9 months this year was 9 months last year, it's up 56%. So the domestic market is also contributing to our projections for next year. We are seeing a strong macro situation in India, also the capex cycle, and also the investments taking place in different parts of the economy is increasing, and we are very upbeat and confident that the Indian market also will provide us sustained growth. In addition to that, we are also, we're getting into the segments of motors and Indian Railways, and we hope that our customer will win this 12,000 horsepower. So there's a lot of things on the table which will help us to grow our business even further. What we're talking about for next year is not including, for example, anything coming from the Indian Railways, because the motor is still under the trial period. We're not talking anything about what would happen if our customer wins this 12,000 horsepower railway contract. All those things will go into FY25, and we're going to have further impetus for growth then coming in from these segments for FY25. So the macro conditions overall are very good, and the company has positioned itself in multiple sectors with multiple products, and these multiple products in multiple geographies, multiple sectors is what is driving the growth.
Okay, great, sir. And sir, is that Alstom winning that 12,000 and either, or what is our backup plan? Because in 9,000 we saw the competition was very aggressive in terms of pricing.
There is no backup plan.
Okay, sir. Thanks.
Thank you. Next question is from the line of Nikhil from SIMPL. Please go ahead.
Hello. Hi. Good morning. Congratulations on good set of numbers. I hope I'm audible.
Thank you.
Yes, sir, you are.
Yes,
Yeah.
very much so.
Nikhil, one question. If we look at the gross margin expansion for this quarter, there are 2 points which I wanted some clarity. One is like for all this period, we were seeing a major RM hit. So is it more of a improvement on the RM side which has supported the gross margin, or is it a business mix change in terms of higher replacement and maintenance, the aftermarket which has supported a margin improvement?
So the sales are slightly lower in last quarter compared to what we did in Q2. So the increase in gross contribution is coming through a better mix in Q3. And I've always been saying that we will increase our gross contribution marginally going forward by 1 or 2 percentage points, mainly due to better mix. We're talking about 7 to 8% now of our total business coming in from aftermarket business, which earlier used to be just 3 or 4%. So almost doubling the amount of work that we're doing from the aftermarket business. All these things are improving our gross contribution. And to a certain extent, we're not seeing any increase in the raw material prices. So we are having a stability in the raw material prices, and that's not giving any adverse effect to our gross contribution. So these things are, and in addition to that, if you look at what's going to happen in Q4, right? In Q4 now we have almost 220 crores to do versus what we did 225 crores to do versus what we did, let's say 190, 195 crores in Q3. So this additional 30 crores of sales in Q4 will give operational leverage, and therefore we will see higher EBITDA margins coming in Q4 compared to what we had in Q3. In general, and if we talk about next year doing 1,000 crores and we're going to do 250 crores every quarter on an average, then they're going to have further increase in EBITDA margins due to operational leverage. So I think the trend going forward is strongly towards increasing the profitability of the company, and it's going to be driven by the mix, higher proportion of aftermarket business, and operational efficiency and higher sales. This is the way that the company is going to increase its gross contribution, is going to increase its EBITDA margins and PAT.
Sure. Secondly, on motors business, if I have to understand, so if you look at Bharat Bijlee and CG, they also have this motor part of the business. So would we be competing directly with them, or would we be operating in the lower megawatt versus where they are operating?
No, I have number of times I have mentioned that we are only going to be working in certain niches in the motor market. We are going to be focusing on the synchronous motor business, which is large motors starting around 5-6 megawatt, going up to 30 or 40 megawatt. In that segment, we don't see these players that you mentioned in this segment. And we are talking about large induction motors, once again starting around 3-4 megawatt, going up to 15-20 megawatt. And these will be for very special applications in the nuclear power industry or in the thermal power industry for very large boiler feed pumps and things like that. So we're looking at very specialized products where the company's technological strengths can be used to get, to deliver the right products, get the right kind of pricing, and also be in a market where there's limited competition. We're not interested in being in the smaller size mass market motor business.
Okay. And last question, we had some operations in Turkey. So because of this earthquake, any impact or anything you are hearing, or we don't see any?
No, I mean in general, firstly, we don't know what the earthquake has just taken place a few days ago, right? So we don't know what but in general the economy is weak. In general, they have a foreign exchange problem. In general, they have extremely high inflation. They have very low investment taking place in the power sector. So these macro things are not going to change because of the earthquake. In fact, it may become worse. So our decision to suspend the operations over there is the right decision. We may just keep the factory partially open, just for after sales service, and maybe do some refurbishment jobs and things like that. But very skeletal manpower and very small costs. We're not interested we have to wait and see how this market shapes up in the next 1 year. If it doesn't shape up in the next 1 year, continues to be in this way, and we don't also see getting meaningful business in the aftermarket business, and we will completely close down. So right now, we're talking about suspension.
Okay, fine. I'll come back in the queue. Thanks.
Thank you. A request to all the participants, please restrict to 2 questions per participant. If time permits, please come back in the question queue. The next question is from the line of Himanshu Upadhyay from O3 Capital. Please go ahead.
Yeah, hi, Nikhil. Great set of numbers. And, I had a few questions. Okay. One was on the aftermarket business, which we expect to be 7 to 8% of our revenue. Is it focused majorly in India, or it is focused outside India? And what is the competitive scenario in this business? And is there some technical expertise or approvals required outside India so that you can be a generator, let's say, to do servicing? And yeah, any thoughts on the margins also in this business?
Well, the aftermarket business, right now for us, as far as the repairs and refurbishments are concerned, it is mainly domestic. For our own machines, of course, we do sell spare parts and provide service for our machines internationally. But we're not doing repairs, out of warranty repairs for our job internationally, because an out of warranty repair would need, the machine is sitting somewhere in South America. It needs 6 weeks to come here, 6 weeks to go back. It doesn't make sense for the customer to wait when the machine is sitting in the ship. So repair jobs, refurbishment jobs for international businesses is difficult to get. People prefer to go to local service providers, and we do have local service shops, so we do coordinate and get the jobs done, and we get a certain amount of money from them. We're not doing the actual service jobs ourselves, and we're focusing on the domestic market. As I said, we're focusing on our own machines. We're focusing on the large wind repairs. We're focusing on certain types of motors, and we are focusing on spare parts. So this is the range of activities right now, which will give us a total turnover, as I said, 7 to 8% of our total next year's sales, and margins are good.
Okay. And both gross margin and EBITDA are better in this business.
Yes. Once gross margins are good, EBITDA will be good.
And one very wild question, but again, just want to understand your thoughts. In the peak of last cycle, 2012-13, our margins on manufacturing touched something like 18 to 20%. Okay. Is the scenario possible that we can reach back to those numbers with much more diversified customer product profile, customer base, and more approvals globally? Or do you think the competitive scenario and macro environment is such that it is just a wide shot? So some of your thoughts on that will be helpful.
I think we need to look at be competitive in the market also. So we will probably flat. I don't know. I don't want to put a number to it, but moving from 16% upwards, we need to get that mainly coming through our internal efficiency and operational efficiency, and expecting to get increased EBITDA margins through better pricing in the market. And that's going to be hard in this environment, especially now when raw material prices have stabilized, and it's not going to be possible to get price increases in the market at this point of time. EBITDA increases are going to take place purely through operational leverage, operational efficiencies. So we will see incremental improvements from 1% moving to 7%, 15.5%. For TDPS for sure. And beyond that, I don't want to comment at this point of time.
Okay. I'll join back in the queue for further queries.
Yeah.
Thank you. Next question is from the line of Rajat Sethia from iThought PMS. Please go ahead.
Hi, thanks for the opportunity and congratulations on good set of numbers. So my first question is about the revenue capacity that we will have. I think we have mentioned that we will have a manufacturing capacity of 1400 to 1500 crores from the existing plant without much capex. Is that correct?
Yes.
And aftermarket business, whatever we do, spares and repairs, that will be in addition to this. Is that also correct?
No, that will be within this.
Within this. Okay, understood. And sir, the other question is about the business mix that we will be generating from, let's say, biomass or other waste to energy solution kind of products on the segments.
No, so the steam turbine business is where we do waste to energy, we do biomass, we do cogeneration. So if you talk about total steam turbine sales, how much of it is coming from fossil, how much is coming from renewable, I don't know. Vinay, I think it could be 60-70% coming from renewable, 30-40% coming. Internationally, it's all renewable. Yeah, internationally, it's 95% renewable. India, I would say it's about 50-50.
Okay, so internationally, okay, understood. So biomass, waste, and other renewables, which are basically steam, which fall under the steam category, you're saying internationally is mostly that, and India is 50-50. Understood.
Yeah.
All right. All right, sir. Thank you so much. Wish you all the best.
Thank you. Next question is from Jiten Parmar from Aurum Capital. Please go ahead.
Yeah. So congratulations on a good set of numbers. My question is basically that in the last Concall, if I remember correctly, and there in my notes, that our guidance was 890 crores for FY23. So and we have done around 630 crores. So are we looking at achieving that number? That is my first question.
On the Concall basis, we are going to achieve that.
Okay. And so the question is, the 9 months since growth has been only 10%. We have very good increase in the margins. So are orders delayed, or what is the reason that our sales growth has been a bit tepid?
No, could you, Varalakshmi, could you comment on that? Sales growth has been totally on standalone basis. Our sales are up by 20%.
Okay. So that is because of Turkey is what could be the reason? Is that?
No, I mean 20% increase in the standalone. Standalone is manufacturing, so most of our business is mainly manufacturing business. So the subsidiaries contribute. I mean, they're getting orders for the manufacturing business. So mainly, you can see that our sales are up by 20%. I don't.
Because the presentation mentions that 9 months.
Turkey last year was very large. You're right. Turkey last year was large. And Turkey this year is not so large.
Right.
So therefore, on a Concall basis, you will not see that much of growth. Correct. You're right.
Okay. Right. Okay. That's all I had. Thank you very much. Yeah.
Thank you. Next question is from the line of Krisha Kansara from Molecule Ventures. Please go ahead.
Hi, sir. Thanks for this opportunity. So, sir, you had mentioned that the order inflow is for the 9 months is the highest ever. But still, is there any hint of demand softening, and especially on the domestic side? Do you think that there is a slowdown in the inquiry levels?
No, we are not seeing that. We're not seeing that in Q4, and we're in the forecast also.
Okay. Okay, sir. Sir, and my second question is that last month a leader was awarded with a 1200 electric locomotive award. So can we expect this to flow to us as well? And if yes, how big can this opportunity be? Is my second question.
No, we don't know what that company wants to do. We're in touch with them. They have not yet made up their mind whether they want to make or buy. So we have to see how it shapes up. Right now, we are not counting this in our projections.
Okay, got it, sir. Those were my two questions. Thank you, sir.
Thank you.
Thank you.
Next question is from the line of Dhanil Desai from Total Capital. Please go ahead.
Hi, Nikhil. Good morning and congratulations for a very good set of numbers. Two questions. So the first one is, broadly our order book is up by 42%, and generally our execution cycle remains the same. So when you are guiding for 20% growth next year, are you factoring in changing execution cycle, or you think you are on the lower side of the guidance to be conservative?
Lower side of the guidance to be conservative.
Okay. So execution cycle remains the same, right?
It's easy to upgrade the guidance, and we will do so in subsequent quarters as we keep talking to the market.
Okay, got it. And another thing, I think you mentioned that next year we are seeing at least 100 bits improvement in gross margin, and our revenue also is going to be substantially larger. So from where we will land at 16% this year on EBITDA margin, couple of 100 basis point improvement in margin is something which is realistic number to look at.
Yes.
Okay.
Definitely realistic number to look at.
Got it. Thanks. That's it from my side.
Thank you. Next question is from the line of Megh Shah from Prospero Trees. Go ahead.
Yeah. Hi, Dhruvesh here. So just wanted to understand any plans on the next buyback, because now money is flowing and the last buyback is a little bit old now.
The board is discussing all the options on what to do with the cash flow that we have. We will keep the market informed. Obviously, the two ways to return money to the shareholders will be through dividends and buybacks. Both the options are definitely on the table. We will keep the market informed on which way we want to go.
Okay. And Nikhilji, one more in that connection, because last 5-7 years you have been consistently adding one or the other line of activity associated to your expertise. Are there enough rooms to add more product lines or more service lines or associated areas? I mean, can we expand the target markets of our business over the next 2 years?
Yeah, we do. We have a number of. This is a constant activity within the company. We have to keep looking at ways to grow. So we need new products. We need new activities. We have a few things which we are working on intensively right now. And once they come to the point where we can discuss it with the market, we will discuss it with the market. But we are definitely working on new things. No doubt about it.
Okay. Thank you, sir. Best of luck.
Thank you.
Thank you. Next question is from the line of Janak, individual investor. Please go ahead.
Hi, Nikhilji. Thank you for taking my question, and congratulations on great set of numbers. My one query is around the nature of the business that we have. So what kind of partnerships do we have with, be it partners like Alstom or somebody else? One, do we have more partners? And are we also independently bidding for railway orders? The nature of those orders, and what gives us right to win those orders, either through partners or independently?
No, so the market which is there for the tenders, right, for the new tenders for the locomotive business, those are tenders where the party has to manufacture the entire locomotive, and we are nowhere in that business, right? So it will be a global major who's in the business of building locomotives, someone like a Siemens or Alstom or Wabtec from the US. So there are a number of just a handful of companies who do this. We have a relationship with a company who has got an existing job with the Indian Railways, and we believe that, and they are making the 12,000 horsepower already for the Indian market, and there's a second tender coming for 12,000. So we hope that they should be in the best position to give the best pricing since they're already making this machine. So we hope that happens. Now the second part of the business is the Indian Railways business, where we directly are making the traction motors for the Indian Railways. And I have mentioned that a number of times that for this business, our motors are under qualification. We have put the first 6 motors on a locomotive. It has to be, and the locomotive has to run for 6 months with our motors without any problems. Then we get into the stage of being qualified. We are 1 month into that process. We've got to wait for another 5 more months and hope nothing goes wrong. Once that happens, we will be eligible to bid for all the new tenders and get a certain portion of it at a good pricing. And that's our goal. I think we will see the results of all this taking place towards the end of this calendar year.
And follow up to this, what will give us a right to win these orders? What will be our competitive advantage?
So with the Indian Railways, you're saying?
Yeah. The ones that you are independently targeting through motors.
These are, we have extremely good manufacturing setup, highly productive, and we've invested very, good money to produce very high quality machines. And we have shown this to Indian Railways, and they are excited and impressed by our facilities. And we believe that we can offer a better quality product at the tender prices. In the end, it's about quality.
Got it, sir. Got it. I'll join back in the queue. And all the best for quarters to come.
Thank you.
Thank you. Next question is from the line of Alicia from Envision Capital. Please go ahead.
Hi, sir. Good afternoon. Thank you for taking my question. My first question is, a large domestic primary mover has been calling out that there is some slowdown in domestic inquiry. Generally, our demand would also be linked. So are we also slightly maybe on back-ended basis witnessing some slowdown in inquiry and hence conversion?
Vinay, you take this question, please.
Hello. Madam, can you repeat that question?
Sure. I was asking that a large domestic primary mover has been calling out that there is slowdown in domestic inquiry. I just wanted to understand that are we also sensing maybe the first signs of the same?
No, absolutely. There is no inquiries levels are not going down. It is rather going up. So we are not seeing that.
Could there be a specific reason for this deviation?
No, see, we are seeing.
I think it's hard for us to comment on what somebody else may be saying.
That's told.
What we're seeing is that there is an increased order input taking place from the domestic side, and we're not seeing the slowdown. We're also seeing that the larger machine business above 50 megawatt, there's a lot of inquiries also in that space. That is also a part of what we call our domestic steam turbine business. So I think all put together, we are seeing an increase.
And this year, as Nikhil told, we are going to have the highest steam turbine business sale. And next year also, we are going to see the same thing. We have a very good pipeline of orders.
That's great. My second question is on railways. It's a two-part question. One, how much of our next year's growth is factoring in getting some orders, one directly from Indian Railways or the tender that's expected to open in March? And second is generally how are the margins in the railway business? Because we've are the margins going to be lucrative enough for us to be able to maintain the kind of margins that we're currently doing on consolidated basis?
Yeah, the Indian Railways business is definitely will give better gross contribution than what we have with our business currently. Once we get to that stage of being in that category 2 or category 1 supplier, okay, that's important for us to be in that stage. Then you get those prices, and with those prices you make good money. With the 12,000 horsepower, we have to see, whether our customer wins it. It's given what happened with the 9,000 and the price difference which was there between the two parties who were there, it's suddenly throwing a lot of doubt whether they will win this 12,000 also. And we have to wait and see. It's not in our hands.
No, I understand that. I just want to know, is this part of our aspiration of the 20% plus growth that we're saying for 24, or that is excluding this order?
I mentioned that earlier that we're not counting the Indian Railways business for FY24. We're not counting the.
So sorry to interrupt you, but we are losing your audio.
Okay, I'll repeat it. We're not counting the Indian Railways business for next year, and we're not counting any potential win by our customer for the 12,000 horsepower also for next year's turnover. I mentioned that all these things would start contributing. If we win, if we're successful, they'll start contributing in a big way for FY25.
So, and just a clarification, while you were mentioning that Indian Railways orders can tend to be better gross margin, this is once our products which are currently being evaluated, and after 6 months, once they are approved. We are speaking about that piece, right? Will be the better margin or on relative basis. Okay. Yeah, thank you.
Thank you. Next question is from the line of Mahesh Vendre from LIC Mutual Fund. Please go ahead.
Hi, sir. Thank you so much for the opportunity. Sir,
Mahesh, sorry to interrupt you. May I request you to speak a little louder, please?
I'm audible now?
Slightly better.
Yeah, audible. Go ahead.
Yeah. So just wanted to understand your motor business. You just explained that railway is a area where motor are under development, under trial, and so maybe by this year end we will get a clarity on this. So this motor development, is it for only looking for domestic purpose, or even export side we can do some work on the side?
No, there's a traction motor, which is the railway business. That's one segment. And then we're talking about the other segments of the motor business, synchronous motors, which we said is for using large irrigation projects. That's a segment. We're focusing mainly on domestic. Even the traction motor business focusing only on domestic. And the third part is induction motors, large induction motors for compressors and other applications there. We are not looking only domestic, we're also looking at export. There are a number of opportunities which we're pursuing. We will definitely be able to tell you about all these things in a 3 or 4 months' time. But the earlier question whether we're working on new products and new markets, we're working intensively on how to see how we can expand our portfolio in these specific sectors, which will give growth not for the next financial year, but for FY25. We have to build the pipeline for FY25 to grow another 20-25% in FY25.
So 3 years down the line, is it reasonable to assume that this business can become significantly bigger than what it is currently now in terms of contribution?
Yes, it will be bigger than what it is right now, definitely, for sure.
And sir, you said you would like to stick to the large motors which are used in industrial. The demand is picking up very strong across the category in India. So we don't want to be, what could be a possible rationale?
So while the demand is picking up overall in the motor business, there's also a lot of capacity, there's a lot of competition. So it's not like there's a shortage in the market right now. The incumbent players will get benefited in the smaller motor business, and it's good for them, but we're not interested to get into that today.
Okay. Sure. Thank you. Thank you so much, sir.
Thank you. Next question is from the line of Adit from Vibrant Securities. Please go ahead.
Hello, good afternoon, Nikhil and the entire team. I have a few questions. The first one is on a quarter-on-quarter basis, we have seen that the employee cost is down by 2 crores. So should we read into that or is it just a quarterly fluctuation?
Varalakshmi, can you answer that question, please?
Hello.
Yes,
Hello, Varalakshmi?
Yes, sir.
Can you take that question,
Hello.
please? Yeah.
Yeah, I have taken the question. It's only a quarterly fluctuation.
Okay. So 9-month trend is what we should look at, right?
Yes, correct.
Okay. So broadly, I see that the cost base, the cost structure beyond the raw material has grown by 12% in 9 months of this year. Should we expect the same trend in the coming years, around 10 to 12%? Will that be the correct way to look at things?
Yes, the inflationary cost will have to be considered, the employee salary increase and even a small increase in the number of people. And the revenue expenses, the inflationary part will have to be built in. Around 10 to 12% should be considered.
So 10 to 12% captures all that, or will we need more investments given the strong growth that we are envisaging?
No, I think that should
small investments are taking place. Yeah, small investments are taking place anyway. But as she said, 10 to 12%, the entire range of cost increases for us to do this additional turnover, what we are projected for next year.
Got it, sir. Thank you. My second question is actually a clarity on your FY23 guidance, which I think is around 890 crores on a console basis, but on standalone it is somewhere around 810 to 830 crores. Is that correct? The console guidance is around 890 crores?
Yes, we will do so.
Okay, got it. Thank you. And my last question is on your capital allocation. So one of the ways is obviously dividend or buyback, but how is the company looking at expanding the capacities given that we are nearing our utilization? So just want to understand the various options which the management is thinking beyond just a buyback or a dividend.
So we need to keep aside some money for the day when we need to put up a new plant, right? And we will put aside some money for that every year until we take a decision to invest. And beyond that, the surplus cash which is there would be then, to some extent, would be then distributed to the shareholders, either through a dividend or buyback. These are the options that we have on the table. And as we generate the cash and as we look at the visibility of the business, and as we come closer to the decision of putting up a new plant and things like that, then we will evaluate all what's best for the organization, and then we will do what's best for the company. So that's our thinking right now.
Okay. Can I take one more question, please?
No, sorry to interrupt you. I'll request the in the question queue.
Yeah, no.
Okay.
Let him ask the question.
Okay, thank you so much. My last question is on the product development. Just want to understand, as a company, how do we evaluate which products to enter? Just to understand the framework, not expecting a pinpointed reply on what products we are entering, but the framework.
The framework it has to, we need to have core competence in that area, or we need to be able to develop the core competence as an extension of the core competence that we already have. That's the first criteria. Then we look at the size of the market, we look at the complexity of the products, we look at pricing, we look at market, we look at whether the serviceability of the products. The number of factors will go in before we take a call. But I would say the key factors are, it has to be something which requires our technological ability and with which we can get decent pricing. That's, I think, for us, a really, really important point.
So essentially, that basically means rotating machines, right? I mean, is that what captures everything about our capabilities, or there is something beyond that?
Yeah. No, it's rotating machines, electrical rotating machines.
Okay. Thank you so much, and all the best.
Thank you. Thank you.
The next question is from the line of Manoj Dua from Geometric Securities. Please go ahead.
Hi, Nikhil. Good afternoon. I'm glad to hear. I'm fine, sir. I'm glad to hear that our relationship with the new gas engine customer is improving and going forward. Can you throw some color on any new client addition we can look in Europe or USA, and any development on that?
OEM, we don't have any new client, new OEM addition to report at the moment. We are working on a few things, Manoj, and we should be able to inform the market, as I said, in a few months from now. Once we bring the deal to the point where we have visibility about the business, we have the agreement signed, and then we can answer all the questions that you're going to put in front of us.
Okay. Thank you and best of luck.
Thank you, sir.
The next question is from the line of Rohit from iThought PMS. Please go ahead. Rohit, may I request you to unmute your line from your side and go ahead with the question, please?
Hello, am I audible?
Yes.
Yes, very much so. Hi, Rohit.
Hi, Nikhil. Hi, Nikhil. Congratulations on great performance and very encouraging to hear your commentary. So, Nikhil, a couple of questions. So, you mentioned, one was just answered in the previous participant's call. So I'll ask you another question was that, so you mentioned that in the motors business, you will be looking at very niche or very specific applications where competition is not going to be much. So, any sense on what kind of opportunity would these be in terms of, let's say, rupee size? And would this be more like a sporadic opportunity, or there is, like, for example, you mentioned about synchronous motors, more sporadic opportunities with irrigation or ponds, etc., that get created, or large construction? So, just wanted to understand if there is a general sense on the overall opportunities. You enlisted a few industries. If you can spend some time on that, that will be helpful.
Yeah, so in general, I think there is going to be a big continuing investment in the irrigation sector as far as India is concerned. And so we know there are a large number of projects which are in the pipeline, and we know that it's going to continue to be a big business in India for years to come. That's one. Second is, we also know that there's going to be a big investment in the nuclear power plant business in India. There's definitely India is going to keep adding new nuclear power plants. This big ambitious program is there, and each of these nuclear power plants requires number of for different parts of the plant, different types of very, very special motors, which we are now qualified for and we are bidding for. And these would be, again, long-term contracts, so we would have good visibility of orders for years to come once we actually get into the business of making these motors, and we're not very far away from that. We'll probably be able to announce the first order in the next time we speak. And then generally in the industrial sector, there'll be specialized motors which are required. And the third part, which talked about the export, we are looking at the LNG side. We're looking at the compression as well as on the LNG side internationally. That's also going to be a big business for years to come. And there is a big requirement for these specialized motors required for compression. And we are actively in discussions with 2 or 3 parties who are actually engaging with us to make these motors for them. So let's see how everything shapes up, Rohit. We are working towards getting good business for the company. We want to position ourselves well in these sectors, and we want to entrench ourselves. The sectors are all exciting. There's enough of business, large amounts of business. It's now a question of how much we can get from that and how quickly we can get into that. So our team is working full, putting all effort to make it happen as soon as possible.
Sure. Just to follow up, Nikhil, that's very encouraging again to hear. Most of these would be again today, whatever you mentioned today, these would be all imported today, or there are players in India who are making it, let's say, for a nuclear or even for synchronous, the kind of orders that you are trying to go after?
Nuclear, I would say, is imported and domestic. HCL is a major player in this market. Similarly, for irrigation projects, it is imported. Plus, DHL is definitely one of the big players in this market. So we have a scope because there's a large, so imports are there right now, and we want to, and it's definitely Make in India, and the government's push on Make in India is helping us to move this process along faster.
Sure. My second question was on the fracking order that you'd mentioned. In general, can you just share some commentary on how you're seeing that with oil prices being wherever they are? Do you see that could be a good opportunity for the probably next year or maybe beyond that as well?
I can't see. It's been so volatile. I don't even want to give any comment on that. But right now, at the moment, it looks like there is investments taking place for power generation, and looks like they may now increase the number of wells they're going to be drilling. And so we see site for about 100 megawatts, 125 megawatts of orders coming in the next 1 month or two. Beyond that, let's see.
Sure.
Keep you updated, Rohit.
Sure. And just last question, Nikhil. So we've been very optimistic, and order inflow also suggesting that, and order inquiry is also very strong in the domestic market. So just wanted to understand, is there, from a competition standpoint, are there more players coming back, or that's still not happening? Any commentary on that would be very helpful.
No, I think in general the industry is doing well in general, right? So
right.
In general, the power business, all the companies in the power business are doing well, and everybody has capacity. So we're not seeing new players coming in, but it's good that this industry, which has suffered for so long, is doing well and I hope it continues for a longer time.
Sure. All the very best, Nikhil, and congratulations again. Thank you.
Thank you.
Thank you. Next question is from the line of Ankit Gupta from Bamboo Capital Partners. Please go ahead.
Yeah, thanks for the opportunity, and congratulations for great set of numbers, Nikhil, and the entire team of TD Power. Nikhil, if you look at our order inflow on a quarterly basis, so we have broadly been in the range of around 200 to 220 crore kind of run rate for the past 2-3 quarters. Given the kind of inquiry pipeline that you have, do you think we can touch 280-300 crores kind of order inflow on a quarterly basis, let's say by next year, or at least in the second half, if not in first half?
I'm going to give a projection on that. I'm not going to give a yes or no answer on that. Obviously, we need to grow our business from the FY24 level to FY25 level, and that will have to be reflected in the order inflow. So how much is going to be, and how far are we going to get with some of these new initiatives, and how much benefit we're going to get? Are we going to get lucky if if our partner wins this 12,000 horsepower? There's so many factors that are going to contribute towards what we're going to see happening in FY25. So let's wait on that. I'll answer your question maybe if not next quarter, definitely the quarter after that.
Sure. That's helpful. And second question was on the margin side, Nikhil. So we have reported one of the highest gross margins in the past 6-7 quarters. and that has also resulted in significant expansion in our EBITDA margins. And you have highlighted that you aspire to reach 34-35% kind of gross margin over the medium to long term basis. So given the current prices of raw materials, especially copper, do you think this kind of gross margins can be maintained for FY24?
No, I don't think I have mentioned 34, 35. I have said around 32 is what we are aspiring to, and we will get to 32. And
sure.
Beyond that, we will see. We can again go to increase it by obviously once we 32, the next question is when you're going to get to 33. So
Sure.
let's first get 32. We are close to that. We'll get there. With that, we will deliver better EBIT, and that plus operational leverage, we will deliver better EBITDA margins next year. Exact numbers we will give to the market once we have full clarity in the next quarter, probably next earnings call. We will give full clarity on what we expect to happen next year. But it's going to be good.
Sure. Thank you, and wish you all the best. Thank you.
Thank you.
Thank you very much. I now hand the conference over to Mr. Nikhil Kumar for closing comments.
Thank you for your time today, and thank you for joining this conference call. Please feel free to contact me or the investor relations team if you have any further questions. I look forward to interacting with all of you once again at the end of next quarter. Thank you.
Thank you very much. On behalf of TD Power Systems Limited, that concludes this conference. Thank you for joining us. You may now disconnect your lines. Thank you.
Thank you.